Hey, good afternoon, everyone. This is Sam, and I'll be doing the state of the market for January 4th, 2021. Good stuff. So, I'm not sure if this is working on Facebook. Give me just one moment to check on that, and then we'll dive in. In the meantime, I did check YouTube, and that is working correctly. It looks like Facebook's working correctly as well. So, if you guys have any questions for me at any point as we go along, just go ahead and leave it in the comments, and we'll go from there. So, like we were saying, this is the state of the market. This is something that we do every Monday. And generally, it's just to kind of give you guys an idea as to what's going on with the market, what are we looking at, what are some catalysts that are coming up potentially, things like that. So, really interesting day to talk about the market, certainly. So, let's just dive in. You guys, again, if you have any questions, just leave it in the chat and either Facebook or YouTube, and we'll get back to it for sure. So, one thing that I was looking at here to start the week with the markets is going to be this squeeze that's on the SPY. So, one thing that I noticed coming into this week was not only did the SPY have a squeeze on the daily time frame, which just means it's compressed, right? It just means that it's gotten a little too compressed, and usually when you get compressions, you get expansions in one way or the other. So that's the idea behind the squeeze. So that was the main thing that I was following to start the week was this daily squeeze. Not only do you have a squeeze here on SPY, but you also have one on XLB, which is the materials ETF, XLC, which is the communications ETF, XLI, which is the industrials, XLV, which is healthcare, and SOX, which is the semiconductors. So it's a really and transportation IYT. So it's kind of my favorite setup because you have the entire market in a daily squeeze, and then you have, let's just choose a sector, doesn't matter. Let's say, I don't know, industrials. And then you have the component of that sector in the squeeze as well. So this is kind of my favorite setup. And we call it nested squeezes because you start with the big one. Well, nested squeezes are time frames that are nested inside of each other. So like a daily squeeze inside of a weekly squeeze would be a nested squeeze. But I call these nested squeezes as well because cat is in a squeeze because of this, and XLI is in a squeeze because of this. So it's just it's not an uncommon, or it's a somewhat uncommon pattern, and it's just it can lead to high probability setups, which is basically it. So it is my favorite setup, and that it was what I was watching to start the week. I was looking for this squeeze to try to fire long as soon as today. We did gap up, and we hit this 2.5 standard deviation Bollinger, and we basically just sold off all day on pretty big volume. Now that's probably going to have to be something that we talk about because this was a pretty large sell-off. Pretty much all day. Now, here's the thing on SPY, the basis for SPY is the 21, right? So if I trace in the 21 here, you see how it did hold it on a closing basis. If you look at the weekly, the same dynamic is around the 8, and you see how it came down and kissed that 8 and then bounced off. So it could still go either way. This is a very much a market that is news driven, and if that doesn't appeal to you, then maybe just trade smaller or stay on the sidelines until maybe Thursday or Friday, right? So we have the Georgia elections coming up. I think those are going to be tomorrow. We probably will know the results maybe by Wednesday. And we could argue back and forth as to what caused the sell-off here, but I think largely it was just folks being a little bit nervous about that potential Senate race, and then what it could do to basically the what's the polite way to say this? Um, Basically, the market wants kind of lack of progress, if you will, right? So, if that Senate race does go fully to the blue team, then they will have the majority and they'll be able to do anything they want. Whereas if it goes to the other side, they might be able to block things. And the market prefers that, right? The market prefers gridlock. So, if there's no gridlock, maybe there's a chance this thing could sell off. But at least as of right now, I would still give it the benefit of the doubt because we are still holding the 21. So let me just do a quick check for some questions here if you have any. And if not, then I'm going to show you a couple of things that I'm looking at. Okay. So as we go along, if you guys have any questions, just go ahead and put it in the chat, and either on Facebook or on YouTube, and we'll come back to it. So here's a couple things that were on my watch list to start the week. Now keep in mind, you will want the market in general to hold up in order for these picks to work out. But just a couple things that were on my watch list was the industrials because of the squeeze, the communication sector, which I think has a better position here than the industrials personally. I did pick up a little bit of Google today just based on this squeeze. This could easily be a topping pattern as well, so I do want to caution against that, right? Just because you have a squeeze, now when you have a squeeze and you have trend, the probability, especially weekly trend like this, the probability that the squeeze just kind of reloads and fires long is certainly there. But I also have to acknowledge this is kind of an ugly pattern here. Multiple days here at the highs without a breakout, without a new high. So, was this a final shakeout before we break out? Tough to say, but we'll know a lot more tomorrow. But just be aware that just because you have a squeeze here doesn't necessarily mean that it's just a blind buy necessarily. But I do like XLC here to continue. Within XLC, like I was saying, I picked up some Google because one thing that I like to do is, if you have an ETF that has a setup, go inside of the ETF and see what the components are and see if there's anything that might look good. Now, I'm going to show you Google here real quick just because I did pick up a position here today. But I also have to acknowledge this is traditionally going to be a very bearish pattern, right? You kind of have a little bit of a topping structure here on Google. And really this common low right here is really the only thing holding it up. I really wouldn't argue very many moving averages here. You could argue the 50, I suppose, but really this line right here is what's holding it up. If this does break lower, then that will be an early indication that the market is going to get weak because this is kind of a giant topping pattern. Now, here's the flip side of the topping pattern because we've seen this before and we've talked about it almost every time that it's happened. There's your topping pattern, right? Shoulder, head, shoulder, shoulder. However, what we have typically seen is that this pattern, which by the book should break lower, what we've actually seen is that it kind of takes a turn and then it breaks over the shoulders and actually goes and makes a new high. So a little bit of two things, right? If you just look at the pattern, it's bearish. It looks bearish. It has kind of a bearish tone to it. If you kind of look inside of it, it is bearish. The one thing that I will say against that kind of idea, or kind of what's staring at us in the face, is that we've seen this pattern before in a lot of different things, and I don't remember the last time it worked out. So, picked up some Google today. I also like the semiconductors here, so I'm going to show you what I'm looking at on semis. They had kind of an unusual day, and they definitely are extended, but this appears like it was a good consolidation here. It kind of has everything I would look for in the semis. And this is SOX, so this is just the index for all the semis. You could use SMH, it's just fine. But just understand that if this looks good, usually semis, by and large, will also trade well. So what I was looking for here was kind of a series of higher lows. You have this flat top here, right? And then you went into a squeeze. So you had all this extra momentum that drained out, flattened out, and then that gives it the ability to kind of go into the next cycle, if you will. And it started off, it was a hell of a day, right, for the semis. They started off incredibly strong. You can see this big wick up here as NVIDIA and AMD and a lot of other things are trying to break out. And then the selling hit the market, and we pulled back just to the 8. So even though it's a hideous candle, this is, you'd have a hard time making an argument that this is a bullish candle. It did pull back just to support, right? An aggressive support, mind you, right? So again, one of the areas that I'm focusing on is the semis. So I'm just going to kind of quickly show you a few that I'm looking at. AMD, I think, it has to be on your list. Notice how much this one looks like Google, and that you kind of have that same kind of topping pattern. It hasn't played out. And again, I haven't seen these play out for a while, but I do have to acknowledge it. So AMD's in the list. I don't know if AMD is the easiest play on that. So A couple of other plays that we've been um, using as a proxy, if you will, for the semiconductors is something like Texas Instruments, which is TXN. And this one has a pretty clean, it had a pretty clean setup. It's still pretty clean, but today's action just is pretty volatile. But what I was looking at here on TXN was you see how it went into consolidation but held the 21 throughout the consolidation. So you have this great trend, right, on the weekly. And then, you get a little tired, you go into a consolidation phase, you start to lose momentum here, and then you go into a squeeze. All the while, and this is extremely strong, holding the 21 simple or the 21 exponential, which is very strong. So I got a position there in TXN, and then the other one I picked up was Qualcomm. It's going to look very similar. Notice that this one's just a little bit weaker than TXN in terms of its structure. We just looked at TXN. I mean, they're all identical, right? Basically. So with TXN, Texas Instruments, remember how it had this weekly trend, same as this one, but then it came down and held the 21 the whole time. And do you see how this one, it has the same structure? There's a higher low, higher low, higher low, higher low, but it didn't hold the 21 here. So it's just a couple of little clues that you can use to kind of gauge the strength of your stocks, right? Because if it was between Texas Instruments and Qualcomm, I think Texas Instruments has a better setup, right? But at the end of the day, here's the thing: if these sucks, if this dynamic here doesn't work out, then I don't think there's going to be any trades that do, and that is SPY first, and then whatever sector you're looking at second, right? So I wouldn't break my head looking at Qualcomm or Nvidia. Nvidia had a great day, or AMD. Just understand that this has to come first in order for any of this to work. The SOX has to hit second, and then your stock is third, right? Hopefully that makes sense in terms of the order of operations here. So just a couple things that I was looking at there, and let's see if I did anything else. Nope, that's pretty much it. The only other thing I want to show you guys here, and then I'll take some questions if you have any, and if you don't have any, then we'll call it a brisk market update here. But one pattern that you should be very aware of is these mega cap tech stocks and their weekly squeezes. So you have this dynamic here on Amazon, very similar to Texas Instruments, but on a weekly time frame where it's holding the 21. See that? All the while it's consolidating and going into a high compression, which is the highest version of the squeeze. Right? So you're coming to this kind of end point here where you're going to run out of room and you're really squeezed up. So Amazon has earnings coming up at the end of the month, as well as all the mega cap techs, and we could see movement at that point. So keep an eye on this pattern here on Amazon because it's going to be a huge move. And whatever way that breaks, it probably will dictate the direction of the market as a whole, probably for 2 to 3 months. Because again, if this and this could easily fire short as well. Just the probabilities that it doesn't. But once this fires, it goes about 8 to 10 bars, and on a weekly chart, that'd be 8 to 10 weeks. So roughly 2 to 3 months. So just a couple of things there that I wanted to touch base with you on. If you have anything for me, let me know. I'm just going to check the different channels that we're on. Okay, so Rod on Facebook wants to know what is a topping pattern. A topping pattern is a pattern that let me get my. So let's go back to something like Google. So a topping pattern happens when you start to lose structure and you've been trading sideways. Basically, it looks like distribution. Now, again, I do have to preface it with this. This pattern is almost textbook in terms of being a kind of a topping pattern, but I have not seen these patterns play out lately. Right, so there's your support level. Right, I think we can all agree. That initial gap, that push lower, this gap, this candle today, right? And so you end up with this kind of you can call it a head and shoulders. It doesn't really matter. You see, but you see the kind of the triple top here. You hit this point, you hit this point, and then you come back down and you make an equidistant. So you never break back to this point, right? So it's just kind of a it basically looks like distribution, right? Because you can see here, but above 17 and below 1840, where has Google gone? Well, it's gone completely sideways, right? Now, when it's going sideways, not a big deal. You want to see it continue to catch on this 50. The 8 and 21, they're going to get a little messy, and only the strongest stocks will hold those during consolidations, like TXN. But in this case, you want that 50 to hold. And we could argue whether it did today or not, but it's just kind of it's a pattern that goes from being a trending pattern to a sideways pattern. And then the potential that you can roll over happens on something like this. You see how the trend oscillator here is trying to break the center. So all of these things could kind of line up and kind of hurt Google. The one thing that I will say about all of this, because if I didn't have that little bit of previous experience, and maybe it's different this time, but I've seen this pattern before on a lot of different stocks, and it hasn't played out to the downside. So you're seeing it here in Google, you're seeing it here in AMD, and while it's a very dangerous pattern, because again, if this pattern were to break, this entire structure comes down, right? So you'd have a huge move here to the downside, roughly about 150, $140. So it'd put you down to about 1550 if this broke lower, right? So that'd be a huge drop. So you do have to be on guard with that. But at the same time, we have to kind of weigh the probabilities here. And at least until proven otherwise and we get a conclusive break of the neckline, I would still treat this as a bullish chart. So let me know if you guys have any other questions. Just checking the channels here on the YouTubes and the Facebooks. So hopefully that helped, Rod, in terms of what is a topping pattern. Okay, I'm not seeing any other questions come through, so I'm going to give it another minute or so. Last minute request for questions if you have any, or even if you just want me to take a look at a ticker. So in the meantime, I'm going to go back to SPY. And one thing that you want to see if you're bullish is just reclaiming some of these levels. So whenever you have damage that's been done to the chart, you kind of have to repair it. And so if you ask yourself, where's a support level that's aggressive? Well, it's right there, right? It's the 80 MA. Where's your second support level that's more conservative? It's right there. It's the 21. You see how you're kind of right smack in the middle? You closed above the 21, but you closed below the 8. So you're probably on the 13 or so. What you want to see tomorrow, if you're bullish, is you want to see price get back above that 8 and close there, ideally on good volume. It doesn't have to repair the whole candle and make a new high or anything like that. That's probably going to take a day or two if it happens. But you do want to see it get back above the 8 because it just puts it back on the shelf. Right now, if you're bearish, the flip side would be what you want to see if you're bearish is a solid close below the 21. Today was not it. Today was a good first shot across the bow, but tomorrow will be the tell, right? So if you're bullish, back above the 8. If you're bearish, you want it to break the 21 on a close and ideally equal or greater volume than today. So Joe wants to look at Facebook. Facebook's kind of interesting here, just because it is a large part of XLC, which was a setup that I liked. However, when I look at Facebook, I'm not quite seeing the same thing. So with Facebook here, can you see how, well, one, how messy it is, number one, and then number two, what is the meat and potatoes of all of these mega cap techs? And Facebook's just one example. Amazon is another. Google is another. Adobe is another. Microsoft is another. They all will have this weekly squeeze, right? You see how Facebook here, just like Amazon, is holding its weekly 21 almost to the tick. You're kind of building up the same pattern there, right? Where you're going to come to this point, and it almost looks like it's going to be a market-wide catalyst because either everything goes up huge or everything goes down huge. Because you're coming to this point, we're going to run out of room on this triangle. Also you're in a squeeze, and then you're going to get a massive move from that. If you look at the daily chart, though, do you see how messy this is? You see how all your moving averages are going sideways here? The 50, the 100, the 8, and the 21, and price is all sideways. And then do you also see how the momentum indicators are below the middle? So this right about here is where everything went below the middle, right? You see on these both of these indicators, if you look at the lower half, that's where the lines are. That's not a good sign. Also on the weekly chart, you see how if I trace in the middle of this line here, you see how that yellow line is breached to the downside. So I don't think there's a lot of advantage here in Facebook, frankly. So that's why I left it on the bench. If you look at Google, I think it's just a little bit better setup overall, and you're kind of getting the same idea. If you're looking for something that's as explosive in terms of a weekly squeeze, but doesn't have any of the issues or as many issues as Facebook, I would look at something like Amazon. And then you want to look at Square. Square I like. Square I do like here. Square and PayPal actually. And the reason I like these is because they actually already started selling off well before today, right? So I don't know if today might have been kind of the last flush. PayPal here traded extremely well. Bounced off this beautiful support level at 227. It didn't close perfectly, but it did show good response. So between the things that we've looked at, I do like Square here. Now it's all in how you play it. One thing that I do like on Square here is one, it has held structure very well. Two, it has pulled back to support because every time that it gets a little too far away from this weekly 8, it always kind of checks back in, right? So you see how it gets a little too hot, pulls back, a little too hot, pulls back, a little too hot, pulls back, and in this case, it flags into it with 3 weeks of down action into support, which is pretty strong. The last thing that I'm looking at here on Square, you see how it's going into a low compression squeeze? Oh, it's green dot, and then the first black dot is right there. But you also see how it's not flat, right? You see how the squeeze here is forming, it's falling, but it's not at zero and flat. And that's usually what I prefer, which means it's a little bit more ready. So I do like Square here, but based on what I'm seeing, I would more than likely do this as a butterfly. Right, I wouldn't necessarily look at doing calls here because the butterfly will protect you in the event that this has to go sideways for, let's say, 3, 4 days, flatten out, and then it goes. Right, so let's say it does something like this, where it just kind of trades sideways in this box, between, let's say, 215, 225, and then it goes that way. The butterfly will work better for that. Is that the 21 EMA that I'm talking about? Yes, Mark. The green line is the 21 EMA on whatever time period that is. And it's an incredibly useful one. I mean, hopefully you've seen enough examples just today of using the weekly 21, on something like Amazon, or even as something as weak as Facebook. You're still seeing that dynamic play out very well. Do you think we should wait this week out to see how the tickers trade the first week of the year, or is it look an opportunity to get in or out? Well, I think that's a good question, Elena. The markets look pretty bullish to me, but I think the next, let's say from now until maybe Wednesday or Thursday, they're going to be very headline sensitive, just because of what's going on with Georgia. Right. Not only that, but then you had the UK go into another lockdown, and usually, I don't think that's too big of a deal. I think the market's just kind of gotten used to that. But uncertainty is what the market doesn't like, and the Georgia elections here are pretty uncertain, and it's kind of important, right? Because whether you get gridlock or not depends on the outcome of that election. So the market probably wants gridlock, um, and we really won't know until after Wednesday. So I'll say this: the market is bullishly positioned, but I would have to see it retake some support levels. So if you're asking me what I'm trying to do with it, I came in and I bought today. Now I bought a little bit too early, first hour of the day, probably not a great entry. If we go back to SPY here, what I would want to see is just for it to retake a support level, right? So if we hold this 21 again tomorrow, And even better, if we close back above the 8, I think it sets it up. We've seen these kind of flushes before, and they have been relatively short-lived. And I think once the Georgia catalyst is behind us, whatever the outcome is, I think the market resumes its trend. The way that I would adjust for that, Elena, is just to trade smaller. And I wish I would have taken my own advice, but just I would trade smaller, and then that way, you still have a foot in the game. You can kind of add to your position if you wish, and if the market goes against us, then you've risked small, so you can always adjust or just simply get out. With ACB here, this one isn't my favorite. I have been looking at the weed stocks, but they're very difficult to trade. And of course, this is the one I was in, and now it's up $9. This is the one I would tell you to get into. Something like Tilray, CGC, just the majors, right? Because ACB here, and I could just point out a few things. And it might be a huge mover, don't get me wrong, because the way that it works is when the space moves, the worst things will move the most. So you see here how this one has this 200 simple moving average kind of cutting in on price. You have all your, it's just a mess. And then you look at something like CGC, which is the biggest one in the space, and do you see the difference? Here, everything's aligned, right? You have the 8, 20, 150, 100, 200, whereas on ACB it wasn't aligned. So if you get the timing right and all of these move up together, because they always will, then ACB is going to outperform because it's kind of the bottom of the barrel. But for most people, including myself, I think you're better off trading just what already has good structure. And in my view, that's going to be something like CGC or Tilray. Much better structures than ACB. Okay, I'm not seeing any questions on the YouTubes. And I got more people watching there. So let me just reload. Okay. Well, if you're on YouTube, I'll give you a minute or so if you want to jump over. I'm not sure if you can ask questions or not, to be honest, on YouTube. I think you should be able to. But in the event that you're not, just pop over to Facebook and you can ask me if you have any questions there. I'll go another minute or so if you guys want. So, last minute call for any types of questions. I hadn't looked at weed stocks today. This is kind of frustrating because I had some Tilray calls last week. I don't think I would have been able to hold them. The shakeout was pretty strong. But this is starting to shape up pretty good. What I typically like to do with this, and I rarely trade weed stocks, and I traded them last week and I didn't do well with them, which is why I don't ever trade them. But one thing that would suggest doing, and this just goes back to always knowing your sector, follow this ETF, which is MJ. And if you like this one, then from here you can go and buy ACB, right? Or CGC or Tilray. Because the way it works is if this is up, then ACB will be up the most, Tilray will be up the second most, and then something like CGC will be up the third most. But if it doesn't work out to the upside, then guess what? It all flips, and then this one gets hit the hardest, and this one gets hit the least. I don't love those odds without a crystal ball, so typically what I do is I just go for the quality name, right? You might leave some percent on the table, but on a down day, you will be happy that you did. Yeah, last two questions. Can we look at Apple? Definitely. And skew and put call? Sure. The skew and the put call it looks like a scary story. So Apple here, same pattern as the rest of them. And do this work on your own, right? Just now that you see it, compare something like Apple weekly to Amazon weekly, and then look at the dynamic here on their weekly 21s and how Apple also had the same pattern, and then it got to its apex of its triangle and broke out, right? And you see how the weekly squeeze on Apple has an upward bias. So this is the strongest one that I see in the group. Maybe Google would be stronger, but honestly, I think I'd rather buy this pattern on Apple because it still has some gas in the tank. Um, it's a very tough call because I'd want to see it hold the 21 here, right? And I'm not really seeing a fresh setup. So Apple, while I think it's showing good relative outperformance to the FANG stocks, I don't see a spot to do anything with it because one, I don't have a daily squeeze. Two, you see how this 130-minute squeeze? The reason we use 130 minutes is because the trading day is 390 minutes. So if you divide that by three, you get 130, right? It gives you three equal bars where you can't do that with an hourly chart. But do you see how this is going into a down squeeze? That alone would probably keep me out. So I think there's better opportunities here than Apple at the moment. Semiconductors, I think, are a better opportunity. Even something like Amazon or Google, I think, is a better opportunity. So Apple has, and I do want to get this correct, Apple has the best structure of all of them, and it has the most development of all of them, but it doesn't have a setup that I can trade. UNH, UNH, I thought was a great chart. I think that this is setting up for a huge breakout. Now, we could argue whether the politics of the moment will affect that, and it almost certainly will, but this is setting up for a huge breakout. I would definitely keep this high on the list. You have this massive kind of consolidation pattern here, and you've already kind of started breaking out of it. And honestly, it really wanted to go today, but it just got sold off with everything else. And look where it closed. You see how far away it closed from the 8 and 21? That's extremely strong. So that is a stock that wants to go higher. You have a slingshot squeeze there, holding structure, breaking out of this kind of downtrend that it was in. You see that little triangle it was in? So this looks like a strong buy to me. Not only did this one look like a strong buy, but XLV looked like a strong buy. So I think for my money, I'd probably put it in XLV and just hedge my risk. They're basically going to be the same trade, but I already had my eyes on XLV, and then UNH inside of that looks pretty damn good too. Your upside target, there's going to be two different ones, so I'll just do a quick Fibonacci bit of work with you here. So there's a major swing here that I would measure. You probably already hit it. Nope, not yet. And then there's the retracement that I would measure. Well, there's symmetry takes you into about 355, which doesn't sound like a lot, but you just have to be aware that that is going to be resistance. Just so you can be aware of what I just did here. There's two swings that I see. This symmetry swing. So connect these 3 points, and that gives you this target here, just a shade under 355, and then it gives you this upper target at 370. And then if you run a retracement, which is another, you just connect these 2 points. Then it gives you your Fibonacci structures within that. It gives you your overlap here at 355. If it gets above 355, it's going to go big time. And here's why. It's your fib extension, it's your 618, it's your previous highs and lows, and then you'd have a double bottom breakout, right? Do you see it? So you'd have this double bottom here, and then you understanding that 355 is like diamond level resistance. If it gets above that, you just chase it up into about 370. So I would look for 370. Of course, under fully understanding that 355 is diamond level resistance. So we'll have to cut it off here pretty soon, but Neo to me looks great. I think you have to get it on a pullback. It's very difficult to chase it here. It never retested 50, so it broke above 50 and then it never looked back. This is a very strong chart, and I'd be looking for 55 here on 55, 56 here on Neo. On Futu, there's nothing I could do with Neo just because it's just I need to get it on a retest of 50. This one is very interesting. This one I like a lot. This is a digital. Honestly, I only did the pretty superficial work on them, but they do like digital asset management. So basically, like crypto-based digital asset management in Hong Kong, which is like that's you're saying all the right things. So this looks great to me. Again, I would love to buy this, but I would need it at any support level that makes sense. I'm not really a big fan of just chasing it up here because if you chase it here, then you'd have to be ecstatic if it pulled back to 43, right? Because that is your support level, and how many people would be happy with that? So at the very earliest, the earliest, the absolute earliest I can get in would be 46, because then you have this breakout level at 46. But a much better place to get it is going to be just follow that 8, and whenever things, it may feel like it will never come back, but they always do. Whenever it comes back down to that 8, buy it there. This looks great. This should be a buy and hold, if anything. I would look at this one more as a buy and hold than a trade. Is it too late to get in? Yes and no. It's not too late to get in because I think it's going well above 50. Let me just run a quick retracement here. But it's not too late to get in because I think it goes over 50. It is too late to get in at a good price. So I would look for 55 here initially. 55 followed by 60. That worked out clean. So that's really clean. So 55 followed by 60. But again, after having ran this retracement, really a much better place to buy it is like 45, 50 and or the moving averages. If you can get in it, I know it always feels that way, right? Like on these days like this, when you've been watching something especially, you're like, oh, I missed it. I'm just going to chase it. And usually that never works out. So if you can, try to be disciplined here and pick it up at support. Alrighty, guys. Well, I think we made it. I think we made it through. So I think I got most of the questions answered. Just real quick, I'll take a look at the last one here that I see is FLGT, one that's kind of near and dear to my heart. Well, you already hit your target. Your target was 60. You hit 60 today. This was not too late to get into, but just be very aware that it's got a lot of high short interest, and and it will be volatile, right? So on days like today, the shorts are losing very obviously, and it's great if you're in it. But if you get in here at 60 and they pull the rug out from the shorts and I've traded this thing a few times that I know how volatile it can be. This is a perfect example of waiting for a good entry, and the best entry here on FLGT, same as Futu may feel like it never comes back, is between the 8 and 21. If you follow the pattern here, you see where it's been supported between the 8 and the 21. Anytime it gets too far away, it always comes back, always comes back, always comes back. So just trust the process and buy that center part of support. This is a great chart though, and honestly, this is one of the strongest weekly setups you'll see because it held the 21 just like Amazon. And do you see the pattern here? So you have that triangle. You could cut it a lot of different ways, but it doesn't matter. Um, once you get over the highs, you go. So this should be going higher than 60. I would look for 65 here. There's a lot of confluence there. Oh yeah, P call. Yeah, somebody asked about P call. Thank you. I almost forgot about that. Thank you. That's pretty important. I won't really have much to say about P call though. It's important that you look at it. It's important you understand it, but I won't have much to say about it. One thing that I prefer, because if you're looking at P call for like a timing signal, like oh the P call's done this, that's a sign of this. I'm actually not a big fan of that. One thing I prefer to do instead is to look at the VIX. So I think the VIX gives you a much better read on impending volatility and fear and all the chaos that goes into the put call than put call itself. Basically, I look at it as like this: the VIX leads the P call, right? If the VIX doesn't do something, nobody's going to react in the puts and calls. So the catalyst for P call is VIX, in my opinion. So the only thing I could tell you about P call, because I already knew what it's going to look like before I pulled it up, it's extremely extremely low, and it's been extremely extremely low for a very long time, right? Any reading on P call, the way that I look at it, any reading below zero point 0.9, most people use 1, I use zero point 0.9 because the market tends to be a little bit more bullish. That is your neutral level, and you can see I've marked this level down here between the red lines as overbought. So you could argue, especially here, that this market is incredibly overbought and everyone is long and everyone is complacent, and you'd make a good point. However, it hasn't, from a timing signal, it hasn't done anything worthwhile. Because you could have made this point here, you could have made it all through here, and it wouldn't have worked out. So it's something to be aware of, but again, it's not something that I would look at as a first order operation, right? If you wanted a first order operation, I'll give you one. VVIX. This is it. So if you want to see volatility before volatility shows up in the market, don't look at P call because you're looking at the tail end of the dog trying to figure out, what color its nose is. Look at VVIX, which is the volatility of vol, or just look at the VIX directly. And this will give you a much better indication of impending problems. So that's really all I got to say on the P call. All right, guys, I did go over my time just slightly, but you guys did bring on the questions, so I appreciate you doing that. If you can, leave a like and a comment on the video. They tell us to remind you to do that. So before you part ways with our videos here, go ahead and drop us a like or a dislike, whatever you decide, and leave us a comment. And if you have any questions for me, I'm always available to you in the room, Sam, or via email at sam@simplertrading.com. If you're already a member, I look forward to seeing you in the room tomorrow. If you're not a member, check us out. Go to simplertrading.com and sign up for a trial and see what we're all about. All right, guys, thanks for being here. Hope it was helpful. Again, if you have any questions for me, you have my email. Feel free to contact me anytime. If you're a member, I'll see you in the room tomorrow. Cheers, guys. Have a great night.